Metro Mining is Australia's only pure-play bauxite miner based in Queensland. Its flagship project is the Bauxite Hills mine. Metro ships its ore overseas, where it's refined to meet growing demand for alumina and aluminium. The company's CEO and Managing Director Simon Wensley recently returned from a trip to China. He joins me now. Hi Simon.
Hi Carolyn.
So how are things tracking at Bauxite Hills mine year to date?
Yes, thanks Carolyn. This interview comes at a very good time. We've just released our half-yearly results last week. The company's been going through a turnaround process for the last couple of years after the industry was hit pretty badly by COVID. We've been putting a lot of effort into the sales side of things with the market and also at the mine site. So we're tracking very well in the first half of this year. In fact, it's gone significantly above my expectations. The results for the first half year really do consolidate my view that the turnaround is now largely complete. We're seeing prices rise, which is partly due to our sales positioning with various customers, but also the market rising, and also the immense amount of work that we've been putting in on site with respect to productivity and also investment in some of our infrastructure. So the costs are also coming down, and our reliability, and particularly through our fixed plant, is improving. So I would encourage all your subscribers who are interested to check on the website to see those results.
Let's talk about China. What was the purpose of your recent trip?
It's the first chance that I had to get to China after COVID. We have a Chinese-based team in Hong Kong and in mainland China, so we do stay in touch with our customers, but there's nothing like meeting the senior members of the teams of our customers to discuss the existing business and to also talk about the future. So it was partly about seeing the customers that have stayed with us during this difficult time, but also those that we've brought on, and also trying to establish what the potential demand looks like for our product going on for the next sort of, say, 3 to 5 years.
There's been a lot of coverage on the country's slow recovery following COVID. What was your impression of the economic activity there?
Yes, it was very interesting, Carolyn. I think at first glance, I mean, China's always a very vibrant and busy place, and indeed it was when I was there. There's very little remnant in terms of just the everyday activity. There are very little remnants from the COVID period. So very few restrictions now in terms of just general people movement and also the industries that are operating. So superficially, it looked very active and vibrant. Not until you get outside the main hubs do you start to see some of the impacts of the slowdown in construction. So there was definitely evidence of half-finished construction sites and buildings. But what I would say, and which is directly relevant to the industry that we serve, is that there was a huge uptake in electric vehicles. Most of the cities that we went to had an enormous proportion of their vehicles, right the way from mopeds through to small vehicles, even to larger vehicles that were now electric, and that obviously reflects very much into battery demand and so on, in which aluminium plays a huge part. But also in renewables, you could see lots of vacant land being used for wind farms, for solar farms, etc. So again, whilst the building and the construction industry is definitely soft at the moment, and we're seeing some credit issues there, on the flip side, there is a huge push towards this sort of the low carbon economy. It's a sort of double-edged sword at the moment.
And in terms of trade, Australia has had a somewhat strained relationship with China over the past few years, but some have suggested the tides may have turned. What was the sentiment towards Metro Mining?
Well, look, the sentiment was excellent. We've obviously, with our customers who stayed with us during that COVID period, it was a difficult time for us and for them. And the sentiment was very, very supportive. We've also brought on new customers since then, and they've been exceptionally welcoming and pleased to have us as part of their their portfolio. And I think the wider context from which you hinted at, from the Australian point of view is important. And we've certainly seen a change, I think, in approach from the current government to the Chinese Communist Party in terms of a sensible and well-paced rapprochement, I think, in terms of aligning on the views that we can align on, and having, I think, well-respected differences in areas that we will continue to differ on. And I think that approach appears to be working. I think it appears to be welcomed by every level of the Chinese government and also in industry. We serve state-owned companies as well as private companies in China. And I think it was without fail, all of them were very welcoming, I think, of that change in approach by both countries. And I think, they know that China really can't survive without, the raw materials and with the agricultural products and so on that Australia provides. So it's certainly a win-win environment that both sides see as a very, very positive aspect. And I think that was reflected a little bit in then the growth. There are significant growing elements from the alumina industry there. There's a move from the older alumina plants inland to newer coastal refineries. The same happened in steel and many other sort of manufacturing industries over the years, as imports and exports of raw materials and products became more and more important to the Chinese industry. And we're seeing that move occurring now, and there is certainly a demand for Australian bauxite in those new refineries. And that overall context is being very much welcomed by everybody in the industry.
Let's expand on that a bit. What do the market fundamentals for bauxite look like, and how does the aluminium industry tie into these macroeconomic trends?
The aluminium industry is forecast to grow at above GDP rates for the world and for China over the next sort of 5 to 10 years. And that's mainly a function of those industries that we talked about, the renewables industry, the transportation industry, etc., as well as the baseload, construction and packaging industries that are set to grow at more like normal GDP rates. So those sectors are definitely benefiting from growth in the low carbon economy, and China is going to be one of the biggest exporters of EVs to pretty much every part of the world, and indeed windmills, solar panels, etc. China is by far and away the biggest producer of those elements. So that trend is set to continue over the next 10 years. And they have a strategy for backward integrating into alumina to provide, almost 100% of their requirements for alumina to make that aluminium metal. And so from that perspective, bauxite demand, which is the only way that you can make primary aluminium, is set to be pretty strong over the next 10 years. Also in that context, you've got local Chinese bauxite starting to become more difficult to produce. The quality is dropping. Transportation costs are rising within China. So the use of Chinese domestic bauxite is falling away. And at the same time, in the traded market, there's a change going on with Indonesia pulling out of that traded market. So all in all, it's a time of change, but it's a time of pretty strong growth in that sector. And I think Australia and Metro Mining particularly is very well positioned to take advantage of that growth. Those fundamentals are likely to play out in increased demand, and our expansion is perfectly timed to coincide with that. And I see quite strong growth for we're seeing record imports of bauxite last year. I think there will be record imports again this year and next year as this transition takes place that we talked about. And I think prices for bauxite have risen significantly since the lows of COVID, and in the case of Australian bauxite are now back towards mid-cycle pricing. And I think I see more upside in that price, certainly over the next 1 or 2 years. So I think, again, it's a pretty strong, firm environment, irrespective, I think, of the uncertainty and the complexity of the Chinese economy more broadly.
So Simon, the company started 2023 strong. What objectives are you hoping to achieve to round out the year?
The strength in our first half was very pleasing and set us in a very good position to enter into the second half. That momentum has continued through July and August. We've seen a continued record production again in August as we step up towards our expanded rate. So we've got obviously different elements of our supply chain, starting with the clearing of land, the mining, transportation, screening, etc. And all of those elements are at slightly different stages with respect to our expansion. So over the next 4 months in 2023, we're going to see increasing elements of that supply chain coming on stream with the expanded rate. And that will allow us to continue to expand right the way through to the end of the year. So I'm expecting that, we put guidance out there at roughly 4.5 to 5 million tons. I see that right now as being very achievable, hopefully towards the top end of that guidance as all of those elements of the expansion come into play. And the plan then is to, we normally shut down for around 10 weeks during the North Queensland monsoon or wet season. So we'll shut down at the end of December or in January for that period. And that's a very important time for us to be implementing the remaining capital elements of our expansion, which require that we shut down operations anyway. So it's a good opportunity to install those items. So the plan then, which is currently on track, is to have all of those expanded elements ready for start of operations at the end of March next year. So we aim to be at that sort of 6 to 7 million ton capacity rate moving into the 2024 season.
Simon Wensley, CEO and Managing Director of Metro Mining, thank you so much for joining us today.
It's been my pleasure, Carolyn. Thank you.